On today's show, 3 questions. What's with the Chinese boom and bust? Number 2, what in the world is a short report? And number 3, is Google going through a breakup? Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Will.
And I'm Rabih.
Yeah, you are. We are running this back, guys, and there's a very specific reason why. We are going to start the show with this. So we did the show last week. Normally, just so everyone knows, we normally do this on Friday because we want as much economic and market news as possible for the week, and then we release the show on Saturday. Sometimes, so like same thing with this week, we're doing it a day early because of travel schedules or whatever. So last week we did it on Thursday as well, so a couple days before the weekend. And the topic, one of the topics we started with, Will had a great topic and did a great job breaking down the shipping delays and the port strikes, the 45,000 people at the ports. And we were talking about how there was so much motivation for them to get it done because of political reasons and obviously just the cost and inflation and all this stuff. I think was it later that day, guys?
Yeah. I'm pretty sure it was.
I think it was
that night. Yeah.
So I don't want to take all the credit for it, but I'm pretty sure we were the final catalyst.
Yeah,
for this.
for sure the decision makers heard it and they were like, "Oh crap, we need to make a decision on this."
They were like, "If 2 cents is talking about it, this is a real
big deal." Yeah,
this is a big deal. So we talked about it. We were all kind of joking, like, "Man, they're gonna, this is gonna be fixed pretty soon."
Yeah.
That day, I see a thing come across my phone from Wall Street Journal was like,
the
strike is over. Yeah. So I sent you guys, and I was like, well, this is great. It's coming out 2 days later. So on Saturday, it came out. We were talking about it, and it had already been fixed.
That's good. So, it's a hypothetical. It may happen again. So now we know the consequences. Again. Yeah,
exactly. So we just wanted to clear the air on that. The shipping delays are not going to happen, or at least it was minimal issue with the port strikes. So
and you can thank us for that.
Yeah, you can thank us for that. Thank us for that later.
It. Yeah, it's like the announcer jinx. Yeah,
exactly. Okay, let's jump in. Question, or Rabih, your question. What's with the Chinese boom and bust?
Yes,
What is the Chinese boom and bust? What's even happening in China, Rabih?
Oh, a lot is happening, but not everyone is keeping track. So I'm going to give you what we're observing from the market, and then we'll tell you the story. So listen to these. If I tell you that there is, the equivalent of the S&P 500, which is the largest 500 companies in the US, we have an equivalent to that in China. It's called the CSI 300, which is the largest 300 companies in China. And this is not an individual company. This is an index across the whole country. So when it swings by that much, and we're going to tell you the magnitudes, it's eye-opening. So since, I don't know, from the beginning of September until around September 23rd, the index did not move. We were around 0.8%. No moves at all. Then from Monday, September 23rd, all the way to Tuesday, October 8th. So how much is that? 2 weeks? Yep,
about 2 weeks.
You guys want to make a guess by how much the index moved? The index.
Up. It went up.
It went up.
Up. 19%.
25.
It went up by 32.47%.
Oh my gosh.
Imagine the S&P 500 going up by 32% over 2 weeks. With no pandemic. Like it's a lot of news. And yesterday that same index crashed by 7%. So
in one day.
Today, when I say yesterday, I'm talking about Wednesday, October 9th. And today it's flat. We'll see how it will do Friday. But at face value, those fluctuations are huge. This is just the index. If you go into other asset classes in China, we've seen 44% appreciation in 2 weeks. It's wild. So let me tell you the story. So once upon a time, there was a pandemic in the whole world.
What?
And once upon a time. So and we've discussed this on the podcast multiple times. The US took more of an inflationary path to deal with it. We were, there was a work from home mandate. Everyone should have masks on, but the economy was still running. Everything was still running. On the other hand, China decided to shut the whole thing down. No one allowed to go out of their houses for months upon months. This had really branched out into a different economic narrative, different economic story for China. And Unlike the US, where they had to deal with an inflationary phase, they actually went into a recession. And there were other domestic factors, such as their overheated real estate market in China. In China, if you guys are aware, they have overbuilt houses, unlike the US, where they have underbuilt houses. There are so many houses, but because of the global inflationary pressure, the house prices aren't going down. So there's a lot of houses, and all of them are unaffordable. So imagine the situation. Also, you've got more demographic stuff in China happening, such as an aging population, along with a high unemployment number across the younger generation. So between 8 and 26 years old, the unemployment numbers in China are around 18%. So the country has its own economic difficulties. And as a result, the economy has been struggling. The stock market has been struggling. Also in 2021, I don't know if you guys have remembered, the government in China decided to go after tech companies, and there was a magnificent tech sell-off in that industry, which kind of shattered investor confidence. They know that China on the long run is still a bullish, story. It's the powerhouse of the world. However, on short-term and intermediate-term timeframes, investors were worried, like, what policies China putting in place? Will we actually reap the benefits through financial markets? So along with that, a recession coming up. We talked about 2 cents on it. We talked about it on 2 cents lately. Gold prices have reached around last year all-time highs, and that was due to the Chinese central bank, along with Chinese people, the population, stocking up on gold, because real estate crashed because of the situation it's in. Equities crashed because of the going after tech companies. So there was no alternative for the Chinese investors, especially domestic ones, but to go into gold. So that was what has been happening, and it has gone too long that in September they decided to do something about it. So here's where that was all background, and now we're all up to speed. Here's what has happened. In late September, early October, China introduced major fiscal stimulus package. And the goal was mortgage rate cuts, liquidity injections, a new facility for stock market stabilization. And it was the largest stimulus effort in China's history. It was 7.5 trillion yuan, which is around $1.07 trillion. That's 6% of Chinese GDP. Like, we're talking big money pumped into real estate and the stock market in a sense. So no wonder it went up 32% in 2 weeks, when that much money has been funneled in. And a rally happened. The CSI went up, the Shanghai Composite went up, the Shenzhen stock market went up. All was looking good. And however, the market soon realized that this is just money being pumped in. Like, there is no actual policy behind it. Like, yeah, you're creating facilities for mortgages.
Kind of like a herd mentality.
In a sense, like, if I'll give you a very good analogy that I thought of. In the midst of the 2008 financial crisis, the U.S. government, both monetary policy and fiscal policy, intervened into the economy in a way that actually controlled multifacets of the economy. We had the Federal Reserve intervening, buying back corporate bonds, if you guys remember, buying back Freddie Mac and Fannie, so to make sure that those defaulted mortgage-backed securities are held on the Fed's balance sheet instead of corporate balance sheets. They gave money to major banks. Had this only been the case, we wouldn't have come out of a financial crisis, because that was just monetary easing and pumping liquidity into the system, but there's no policy to drive growth forward. But then came the Sarbanes-Oxley Act, which redefined what is allowed and what is not allowed in terms of lending. How much risk can you take, and how much collateral should each bank have in terms of the risk-weighted assets regarding on their balance sheet. That was on the Basel III Accord. So a lot of other regulations that fix the system, shakes it up, puts it back on the right track, that allowed the U.S. stock market to have the longest bull market from 2008, 9ish till 2020, right? So 2020 to 2020.
2020.
Anyhow, so so you require an intervention on multiple fronts. This is what I'm trying to get to. A monetary policy and a fiscal policy. And the fiscal policy should not only be stimulating, but it should be regarding stuff that generate growth going forward. So they had on Wednesday a press conference to discuss the stimulating package that the market has rallied behind. And to the investors' surprise, they noticed that it was just this push of stimulation. There's nothing coming after it. There are no regulations, or in the sense, deregulations that would help the market going forward. And the people freaked out. So there was a disappointment. On October 9th, after an eagerly awaited press conference from the Chinese economic planners, markets crashed when further fiscal measures were not announced. They were expecting more. They were expecting a version of our Jerome Powell to go up there and tell them, this is our expectation. This is how we plan to grow the economy. From their end, they were just patching a wound, hoping that if they funnel money into it, the economy will revitalize again. So the crash has been happening, and we're monitoring it. But it's a lot of money, swings up and down. So far, it's still a bloodbath. Like the markets, they went up, the sellers got out, they sold, they crashed the market. Those same Chinese economic planners said that on Saturday, which is when the market is closed, so I don't know whether this is a good idea, because we might see a lot of volatility on Monday depending on what happens. On Saturday, October 12th, they're going to be making another press conference to elaborate.
They're like, okay, never mind, people. We'll come back and give you what you want.
They're gonna try to do some damage control, and it can go either way. The market could either be disappointed, or they will come up with a certain set of flaws that will steer the ship back into the right direction. We'll see.
So, Rabih, you're saying the crash was directly on the heels of this press conference because there was expectations not met of what they thought they were going to be talking about, and these regulations they were going to be putting in place. They just were, but it sounds like there was none of that.
Yeah. It was more like, you're sick, you just decided to take an Advil to reduce the fever instead of trying to figure out whether it's a bacteria or a virus and how you're going to actually solve it. That is what the market got disappointed by. It's like, just throwing money at the problem is not going to solve it. You've got structural economic problems. You've got a lot of regulation. You've got high unemployment. You've got very unaffordable housing, where one of the policy or recommendations, why doesn't the government buy those houses and rechange them, remodel them, and make them affordable to the people again, because those corporations are unwilling to do so. So those problems are not going to be solved by just pumping liquidity, even if that is good on face value.
It makes it look good on the surface. But they're not actually addressing the core problems with the economy. And I wonder why they're not. I would imagine they are trying to address those things. You wonder why they wouldn't articulate that in a press conference. Maybe they just mismanaged the communication of it, and now they're coming back being like, okay, now we're going to address these issues. Will, what are your thoughts?
It's just crazy to me that the market can move this much. A certain market, like you said, Rabih, it represents 300 companies. I bet those companies, the movement of the market is
300, but they are the largest 300. So we're
talking the S&P 500, China's version of the S&P 500, right? But it's just interesting to me that the market can move this much based on what we call systematic risk, right? It's something that affects the entire market. It's not related to the performance of these companies necessarily. And this is temporary. The performance of these companies overall will be what moves this market in the right direction. But there is something in the stock market called, political risk and geopolitical risk that, again, the act of this press conference is what's causing the market to go down, not because these companies are producing poor earnings reports at this point, right? So it's just an interesting kind of phenomenon that the market is, underlying it is these companies, but there's so many factors that goes into how the market moves that it's crazy.
Well, that's such a good point to talk about the fragility of the short-term aspects of the market and reemphasize how the timeframes matter. And I think in the short term, markets are super fragile. In the long term, they're really, really stable and strong. So I think it's a really, really, I love that you just brought that up, the difference between systematic risk, geopolitical risk, and again, why we always emphasize the importance of, wait for it, diversification. So these are just always examples it's kind of what this show turns into, is just giving you examples week by week by week, why you follow these strategies. Hopefully that's that's something that comes through all the time. Rabih, you've got other thoughts?
Matt, for the second week in a row, you give me the best segue possible. Like
Yes.
this is
We are literally pros. We are professionals.
And
people.
Incredible, because I got you data about investing in emerging markets, only in China, emerging markets ex-China, and emerging markets as a whole, and how these funds have done. I took the last 3 years, and I kind of data mined this specific time frame because for the last 3 years, China hasn't been doing well. Like this is what we know about it.
Hey, Rabih, really quick. I have to say, 2 weeks in a row, I think this just means that I'm like we're on the same intellectual level. I think that's what it means.
Yeah. Same,
right? Same, like just exact same brain power.
Our neurons are firing
at the same time. Yeah. Okay, proceed. Just wanted to, I wanted it on the record.
Sure. Love you, Matt. And for the last 3 years, we've got, let's talk about the China. I'm measuring it through the iShares MSCI China ETF. Even with the spike, like I wish I can share my screen and show you guys, but even with the spike that looks vertically up over the last 2 weeks from the rally, China cumulatively over the last 3 years has been down around 19%, 18.96% up till now. So over the 3 years, if you've been invested in China, you have lost 18% of your money. This is what's happening. Now, let's look at emerging markets, which is the MSCI emerging markets ex-China. It's also an ETF we can look at. And over the last 3 years, cumulatively, it's been up 6.56%. Right?
This is just give examples of the rest of the countries.
So
like
we're
India.
Talking India, Brazil, South Africa, the BRICS nations, Singapore, Malaysia, Thailand, couple countries in the Middle East, including Israel and Egypt.
Those are emerging markets.
Those are all emerging markets. Turkey's in them. Actually, I think Russia is also included in these, if the data is being included. So
you're saying this market without China is up about 7%.
7% cumulatively over the last year. So when you find another ETF that combines all that together, like China plus those bunch, accommodating to the size of China in the index, that index over the last 3 years has been up 5.44%. So the fact that China is down 19% over the last 3 years, that 6% figure only jumped from 6% to 5%. This is why I wanted to highlight. And yes, great segue, diversification. And this is why no matter what's happening in China, we still feel comfortable. Yes, the index as a whole over that 3-year period hasn't been doing well, but those are very cyclical, and the cyclicality is around 2 decades. So when the US was having its lost decade, that same index was doing 12% annualized. So you have to have both if you're a long-term horizon investor with a 30, 40 plus time horizon.
Think of the pressure it takes off of you when you're properly diversified. You have the proper allocation, the proper diversification. You're following a long-term strategy. Like, honestly, I when you read those numbers, Rabih, and we're talking about this crazy boom and bust in one area of the world that's a massive area of the world, like, you don't have to be stressed about it. You don't have to be stressed about like chasing these big winners of like, oh, what's the next country? What's the next region? What's the next sector? Like, just take the pressure off, follow a system. And you just highlighted it perfectly, Rabih, a 19% drop in China, and the whole ETF that would include that, there's like a 1% difference, 1.5% difference. So it makes a big deal. Rabih, what else you got?
I just want to go another level. I just pulled them up as you were talking. So we said emerging markets, including China, everything is only 6% up for the last 3 years, still same time frame. So let's add the US to it, and let's add developed markets, and then let's look at the whole global equity. So 6% for emerging markets, and then we've got for developed markets ex-US. So this is going to be, we've got Canada and North America. We've got all of Europe, including England, and then we've got Japan and Australia and New Zealand. Those are developed markets ex-US, and those have been up at around 11.5, 12% cumulatively over the last 3 years.
Without the US.
Without the US.
Got it.
And now we have the US, and over the last 3 years, the US has been up cumulatively 31%. So you've got a 31% on one hand, you've got an, what did I say, 11? 11.5% on the other hand, and you've got a 6%. And those three components compose the global equity markets. And the global equity markets, for the last 3 years, cumulatively, with China being down 19%, have made 24.3%. Diversification makes you sleep at night. Like, this is what this is telling us.
You know what we say to that, right? America.
Yes, but not in 2010. Now, yes.
Yeah, exactly. Yeah, we're recency bias. So
yeah.
No, that's great, Rabih. I think that really helps solidify. This is, again, an opportunity to just see that in real time, the power of a long-term kind of like first principle approach of diversification. Will, anything else on this?
No, good stuff.
Okay. That was awesome, Rabih. Thanks so much for that. All right, let's jump to the next topic. Mine will be short. So let's go to this next one. Will, what in the world is a short report? I don't know, so I'd love to hear.
So this was an interesting kind of topic to me this week that I was just reading about in financial news. And there's a company called Roblox. Have you ever heard of it? Do you guys know what Roblox is?
Just the game?
Yeah.
Yeah. Okay.
It's like basically it's like an online game for kids and teens to like build their own worlds, and it's like super popular, and it's kind of like a social media platform because you can interact.
I've seen, like it looks kind of, from what I've seen of it, I'm like,
retro.
How is this even popular? But
right.
It is.
It's like it was super popular. It's a public company. Like they went, they
huge.
IPO'd and everything. They're massive, and so I think it's like I've never played. It was obviously before my time, but I think if I was 14, I would be all over it probably.
Will, you've got so much time on your hands with 5 children.
Yeah, can you imagine? I'm just grinding on Roblox at night.
Kids, go feed yourself. Kids, feed yourself. I'm playing Roblox.
I gotta go build a house in Roblox in the fake world. Anyway, so the Roblox stock tanked this week, and there's a reason, and it's kind of a crazy reason. It's this short report that was produced by this company called Hindenburg Research, and Hindenburg Research they're basically just a research company. However, they take positions in the stock market on the companies that they research. And most notably, like they're kind of famous for taking a short position on a company, doing research, taking a short position, releasing a report, and then watching the company tank based on their report.
That seems totally legal. Yeah.
It's pretty nuts, right? But it's like the reports are usually true, which is what's crazy. Take it or leave it. But basically, these guys are like investigative journalists that have a conflict of interest in the company that they're reporting on. So Roblox, they just released this huge research report where they did their homework essentially. And they basically showed that, it's this, like, you could scroll for like 10 minutes basically. And they've got all these charts and things. And so the summary is Roblox is consistently overstating the amount of people on its platform. And they also called it, like, the title of the article is Inflated Key Metrics for Wall Street and a Pedophile Hellscape for Kids.
Whoa.
Nuts.
Okay. Yeah.
And so basically they highlight, I'll just read some quick points. Roblox is a $27 billion online gaming platform. It's reported net losses every quarter since becoming a public company. Let's see. Since Roblox isn't profitable, its stock price and in turn, insiders' ability to dump hundreds of millions of dollars of stock is reliant on the growth metrics it presents to Wall Street. Our research indicates Roblox is lying to investors, regulators, and advertisers about the number of people on its platform, inflating the key metric by 25 to 42%. Basically saying they have 2 books of people, the book they use to make internal decisions that actually is the real number, and then the amount of people they tell to the public that they have. And apparently it's like all these alt accounts. There's like, they don't track if somebody has multiple accounts. And so they just inflate their numbers, and they're saying by like 25 to 40%.
Whoa.
So, that's the main research, one of the main points. And then the other one is that, like, they found that it's like a pedophile's, like, playground. And like they were like they did these tests where they like took the name of a notorious pedophile who has like tons of counts against him, and they made his name a username, and it like let them make an account. There's no profiling or any sort of
or anything.
filters, and they made it like his name 69, and it like let them make an account. He was like an adult man. And there's tons of like reports that this has been used as like a place for like a platform to groom kids, because it's basically a social media platform for children, because you can go on there and talk to other people.
Well, this is now heavy and scary. This I did not know.
Yeah, right. I mean, sorry to bring the boom on this, but it's like, it's crazy that. So then again, the Roblox. So on Wednesday, Roblox stock dropped like 15% or something.
I was just going to ask. So where's the stock at? It's down.
It's
15?
kind of level now. I mean, it's down. What is it down this week? Let's see. I just had it up. Yeah, it's like been level, but this last 5 days, today it's down. Yeah, it dropped by about 8%, and then it rallied a little bit back, but it's been down overall. And again, it's been down over the past 5 years. It hasn't performed well, but these short sellers are making a ton of money on this, right? So it's just like a kind of a funny. And so I was looking a little more into Hindenburg. They did the same thing with Nikola Motors. Do you remember Nikola?
Oh yeah,
it was the
Utah
electric
guy.
electric semi trucks. Yep. They apparently were part of the downfall of them too, because they had a short position. They released a report saying these guys are frauds. They have no,
which was
trucks.
True,
and it was true. So that's what's kind of nuts about this is these reports are true. They have a conflict of interest to produce the reports, but they're the ones doing the research and finding out, maybe the bad actors here, and then profiting off of it.
That's the weirdest part for me. And Rabih, I want to get your thoughts on this. I'm sure you've got some insight of just kind of how this structurally works, but I think they're doing like this work is needed in the market when it comes to figuring out, like, I think Nikola is a great example of saying this was a fraud. It was a full-on fraud. Yeah. And they uncovered it. What's crazy to me is that they're also allowed to like take a position before they release a report, basically taking down a company that needs to be taken down, but profiting off of it. I don't know how I feel about that, but Rabih is ruminating right now. Rabih, give us your thoughts.
Yeah, it's a very fine line to thread, actually. It depends. I don't think there's a problem with them making money if they actually bust the files of the company, proving that it is doing something that is not in the best interest of investors. Because given that they are taking a position, it means that if they were wrong, they're going to be losing money. So they are exposed on both ends. It's not like only if they are right, they're going to make money, but if they are not wrong, right, they will lose. Because just to go into a short position means you have to pay margin. So the question would be at this point is, how are they coming up with the information to come up to a verdict that there is something illegal happening in company? If that information is coming from insiders, then yes, it raises concerns. But if that is publicly available information, they're just going on earning calls, they're just tracking data on the balance sheet, income statement, and cash flow. Good for them, but I wonder, why are they the only ones in the market who are noticing and finding these consistently? If there's like, but most of the times those companies do not bust until like something happens. Like the first example I can think of is Enron. They were whitewashing and window dressing. That's the word. Window dressing their income statement and balance sheet. They were having returns that deceive investors. They were not acting in the best interest of the shareholders, and due to internal conflict, the information went out and the market reacted to it. I'm totally fine with a company knowing that there's something wrong in a certain company. The price does not reflect the fair value, and them taking a position based on that information. My question is, like, how are they getting the information, and why are they the only ones if they are consistently the only ones?
Yeah, and my question to that, Rabih, you're saying if they're wrong, like they're still taking a risk because they could be wrong. But I think my only like thought on that would be they might be wrong in the long term, but if they have enough power in the market, like they've built up a big enough brand that what they say matters and what they say moves the needle, to where like in the court of public opinion, it's like you might not be convicted in an actual court, but you get convicted by like the court of public opinion via media. Like there's a difference there. So I wonder, I guess where I'm somewhat uncomfortable with it still would be that if their word carries a lot of weight, even if it ends up being wrong, like let's say Nikola wasn't actually the fraud that they uncovered
Roblox
it was,
that like came out and denied it. Like they said, like you guys are wrong.
But it still had an impact. They still made a ton of money on that position.
They
just
manipulated
because they
the
had
market.
credibility.
Exactly. So it's market manipulation.
That's what's
in
weird
a sense,
about it.
like if Warren Buffett goes out and says he was dumping his Bank of America shares, if he goes out and it's like Bank of America sucks, this is just a hypothetical situation, right? Because it's Warren Buffett, there will be a herding reaction where people are all going to go in and dump Bank of America. Like if Warren Buffett does it, just because of his credibility in the market. However, the market, and here's where we separate. Are we going to be part of a herding behavior, or are we going to be autonomous decision makers in the market? Because if Warren Buffett is wrong, any other hedge fund who knows better what the status of Bank of America is are buying it at a really undervalued position after the fact. And in that sense, Warren Buffett will be losing it when it starts going up. So it's a war between the herding reaction, because they just have the credibility, and will they lose their credibility? They'll have credibility until they stop having it. And the fact that every single participant in the market is an autonomous decision maker, and that's what makes a market a market. So yeah, their credibility is at play. I agree with you, but I don't think it extends for that long, because the moment you notice that there is an opportunity to make money, that credibility goes away.
Sure. So you wouldn't define what Will just explained as under the umbrella of market manipulation by this group?
No, market manipulation could. It's a fine line.
Maybe not market manipulation, company manipulation, or whatever you want to call it.
Probably, because let's remember when Elon Musk went up and tweeted about Dogecoin and it went up completely, and there was a case they thought he was kind of manipulating. He was manipulating market just due to him talking. But market manipulation isn't only implemented through expressing opinion on public platforms. Market manipulation could be by creating fake volume on a stock, just buying and selling it to trigger people in to come. So there are multifaceted ways to manipulate the market. The SEC is aware of it, and they go after people, whether it's due to insider trading, whether it's to fake volume, whether it is to intra-asset class, like they do something in the options market and then they do something in the on the stock. And there are games to be played, not games, games is a bad word. There are tricks, illegal stuff to be made that will sway the price, will portray different information. The question would be, especially in this age of social media, does expressing your opinion by coming up with a report, because it's the employee's personal opinion, or just tweeting about it, enough to be market manipulation, or just the market are following them without them being autonomous decision makers?
Yeah, it's an interesting, I think, discussion to be had, and obviously we don't want to go too deep into it today, but I also
business ethics.
Yeah, exactly. I also refuse to ever disagree with Rabih. It's just it's in my code of ethics.
We live in a weird world. We live in an interesting world where you see something and then you think it's true. Like you get on TikTok and you see something and you're like, oh, well, that must be true because they're talking about it, right? And so it's like it's an interesting world where it's hard to know. Like, could these guys be making it up? I guess so. And they have something to profit from it, right?
Sure. Incentive structure is there.
Right.
Yeah. Well, and to your point, Will, that's a really, really great point to say. And Rabih, you're kind of alluding to this as well. Is like, where does the responsibility lie? Does it lie with the individual investor to dig in deeper and say, I saw this report from this group, I should maybe research it versus react?
100%.
And where's that responsibility? I think is the ultimate kind of crux of this. There's something interesting here, though, for me, of just saying, I don't know this group, but if they've built a brand on like, we dive in and give you this detailed report of what's happening on the inside of these companies, while also kind of in the back room holding a position that incentivized. I think that's the key word there. They are incentivized to take this company down.
Yeah.
And so I guess here's my question, Rabih, and then we can move on from this. Or I mean, I would talk about this all day. But to your question earlier of like, what if they're wrong? I guess that then gets into, what if they are wrong? Then do we have like a defamation lawsuit on our hands? Like, could that company sue this group? Like, there needs to be checks and balances on both sides, because if they are profiting off the news, whether it's right or wrong, there needs to be a check on the other side to say, well, you just made up this report that is completely not true. So can Roblox, if it comes out that none of this is true? sue them for defamation? Because they probably should.
Roblox itself can sue them for defamation.
Yeah.
Or other market participants and thus incur a loss. Or other market participants can punish them in a sense. And this is a very simple example of GameStop with Robinhood traders, because that hedge fund at that point thought, and they were kind of right, according to the market value and the intrinsic fundamental value of the company, it's not worth as much as it is. So they went and shorted it. But there was a strong brand loyalty from, the apes on Wall Street. And they decided to go in and voice their loyalty. And it actually, that hedge fund is out now. It lost all its money. So they could be punished in multiple ways. The market is an equal exchange of opinions, and sometimes it's a battlefield of who is right, and the money will speak.
Yeah, I think that makes sense. I'm just wondering, with our loyal following, how do we start profiting off of this? With, I think we can start moving some markets here. So, well, Will, that's an awesome topic. And look, we live in a world now in a country that still allows members of Congress and Senate to hold positions in the stock market, which that should be something we're addressing more than anything. Yes. Sorry to say, it's absolutely ridiculous that we allow public officials to, with the actual power to put policies and move
information,
markets, and get private information through spouses or family or whatever, and then actually hold those positions. That should be addressed right off the bat. But really interesting conversation. Anything else, Will or Rabih, on any of this?
No.
Rabih's just smiling.
I'm good.
What happened?
No, I love it. I really like episodes when, I had no idea what the topic was about, and you and I were just throwing contradictory opinions at each other, hopefully to come to a truth. I love it. We're a very democratic show.
We're gonna Indian leg wrestle later. Okay, so this one will be quick and more of an update. You may or may not know this out there listening, that Google's been battling the Justice Department since 2020. I think this is when this first ruling came out, where they're basically, they're calling it a landmark ruling. This would be, I think, probably the biggest or one of the biggest monopoly cases, antitrust cases ever in the history of the U.S. So the Department of Justice is trying to break up Google. Basically, they're saying they have a monopoly. I had an exact quote. I think they're saying, so the DOJ is basically suggesting this to the courts, and they're saying Google's unlawful conduct persisted for over a decade and involved a number of self-reinforcing tactics. Unwinding that illegal behavior and achieving the goals of an effective antitrust remedy takes time. So this has been going on since 2020. I've been digging into this and still trying to kind of figure out what they're exactly trying to do. Will, you were asking kind of early before we went on, are they just trying to split this? Because Google's main company is, and I think what they're focused on with this is its search engine.
That's what they were founded on, right?
It's founded on a search engine, and
that was what they started with.
Exactly, and that's still their main business, I believe, and that is what the DOJ is going after. That's what these courts are going after, is the search engine itself, and how they're basically have monopolized the search engine, search engine, basically. Although I did just hear, is this true? Ryan told me this. So my generation, for sure, you guys are a little bit younger than me. Growing up, it was just like, Google it.
Yeah.
And apparently, if this means anything to the DOJ, Ryan tells me the young people don't say that anymore. That's a very boomer thing to say. I don't know if you guys know anything about this.
Yeah.
The kids
chat GPTing it.
Kids don't say Google it anymore.
What do they say?
I think they say search it up or something like that. That's what Ryan was saying.
Yeah.
So either way, maybe that's enough to end this whole thing. Anyway, I want to get your guys'. I think my first thought, I'll just say, is this is going to be really hard to do. I don't understand how they're, and I don't understand. I'm not an expert in any of this, but I was doing a little bit of research of the history of antitrust lawsuits with major tech companies. This was attempted with Microsoft about 20 years ago ish, and they battled back and forth for a long time, and Microsoft ended up winning the appeals, and it kind of just died. The last time this happened to a company of this size was AT&T. So they broke up AT&T into regional companies back in the 80s. But I guess that's my first thought. I'll kick it to you guys. I think this is going to be really difficult. Google has about as much money as possible. They're already coming out firing, saying we're going to appeal this till they can't appeal it anymore. What are you guys' thoughts?
It's just an interesting topic. Like it feels like there are like multiple companies, the biggest tech companies that kind of just own the world in a way. Like it feels like Apple and Google and Microsoft kind of just dominate. It reminds me of Verizon, Exxon, Chipotle, or whatever from Parks and Rec, where it's like there's just these mega companies and they are monopolizing.
Don't you dare come after Chipotle, everyone. No, leave Chipotle alone.
For sure. Google better not monopolize Chipotle somehow.
You better leave it alone. Those chicken bowls, my favorites. I'm gonna go.
The robots
today.
are coming for those guys. Yeah. But it's just interesting that they're trying to break the company up. Like there's a world where Alphabet isn't a company. Like they break up the search engine to be a separate company, and they have Gmail and Google Docs and everything separate. And I don't know. I don't know much about it, but it seems hard. And it seems like Google probably just willing to bleed these people out. And they'll just bleed it out in court as long as they can, I'm sure.
Yeah. Yeah, I agree. It's kind of like the topic we just talked about. It's very complicated. I can see arguments on both sides. I do think we need to have antitrust laws for true monopolies. I think you could argue Google is a monopoly at this point. They do have the power to push out other groups, other companies. They've done it for years. Apple's been battling things. They're on their own as well. I don't know what you do though. It's like I think by the time they become a true monopoly, are they just too big to stop? That's kind of where I feel like Google may be at. But Rabih, you've got thoughts here.
Yeah, I don't know. I'm a history buff, so I'll take you back to Teddy Roosevelt and them breaking up the big banks at that time and the big railroad companies. It depends on the value system of this country. Do we have laws above everyone else, including companies, or do we have companies above the laws? And if there is a certain point where companies, through proven, between quotations, so this is up to the court to decide whether it's a proven monopolistic behavior, then remedies should be made to protect the consumer, to protect the American citizen, in a sense. That is where I personally stand, where I think this is what allowed the system to keep going, because a purely capitalist system without any checks and balances on it actually ends up allocating resources so efficiently that some people will become very poor, right? This is how a purely economic capitalist system would work. So you need to balance the social dynamics that it leaves as a residue. Regarding Google, I haven't read the case to be honest in full details, but I promise you I will, because why not? But
you got nothing going on this weekend.
Yeah, nothing going on. So quick Thursday afternoon. But the idea would be, I think, why they are separating them is not because the search engine is the only search engine out there. Believe it or not, there's still Bing and Yahoo somewhere, and you can use ChatGPT. But it's the idea that if you search something through the Google browser, the recommendations or the only options that you're going to get afterwards are Google products. Like searching a video through a Google search bar will only take you to YouTube, which is a Google company. Trying to find, other stuff, they're going to take you to Google sites. So this is, I think, where the monopoly lies, similar to how Apple on their Apple Store prevented anyone from having their apps unless Apple gets paid. I think this is where the issue has been. From an investor's perspective, because this is what matters, whether they decide to spin it off and create another public company or etc., a diversified investor should not be worried. And if there's another company to invest in now, you just buy the other ticker and you move on. Yeah,
it's a good point, Rabih. Just to that point, they've referenced Google's practices of payments to competitors to remain at the top of I don't know how any of this works on the back end, but basically Google has so much capital, so much money. They've been able to basically push everyone out by paying them to remain as the top search results for basically everything and monopolize the actual search engine.
Yeah,
they said in a case first brought by the Department of Justice in 2020 held that Google's massive $26 billion payments to competitors chiefly Apple, violate antitrust laws and inhibit consumer choice and innovation. So again, I know Apple's been up against it as well. These companies are so huge. I think we're going to see this battle go on for years, before we see any type of remedy. But Will, any other final thoughts on this?
No, it's just, I always think of how our dentists are like, it feels like they're beholden to Google because that's where everyone goes. So it's like we have to advertise with Google, and Google charges us. I think our company does Google advertising, right? Like,
yeah.
Right. So
and YouTube
and you have to care about the reviews because everyone goes to Google to see your reviews, and like you use Google Maps, which pulls your reviews right up. And it is an interesting phenomenon where they have cornered almost everybody. You don't really have an option not to, because you can't not advertise on Google, and you can't not care about your 5-star rating on Google. Otherwise your business won't thrive. And so they have everyone in a stranglehold, it feels like, which is why the DOJ is trying to break them up, probably.
Yeah.
Dude.
And to that point of consumer choice, I mean, the two top search engines in the world, I believe, are Google and YouTube, which is owned by Google. Right. So Google truly owns the search engine across the entire world, basically, where Google and YouTube are allowed. So interesting. We'll see how that plays out.
Isn't still going.
Ask Jeeves is not. I will tell you. Two companies. So competitors, Yelp and then DuckDuckGo, both spoke out, and they basically said they're urging the courts to devise new rules preventing Google from paying other firms that make Google search a default choice for users. So DuckDuckGo, I've never used before, and Yelp are trying to kind of like jump on the bandwagon and be like, yeah, we got to do something different. So interesting. We'll see how this plays out. I think it's going to be, again, years and years worth of a battle here between the government and Google. So more to come. We'll tease that. Are we going to tease that for years to come, not just a weekly tease?
Yeah, so, I mean, it'll shake up the stock market eventually if it does happen. Like it'll mess with the value of one of the biggest companies in the stock market. So
I'm sure, and Rabih will have all the data to back it up to share. So, all right, Rabih, Will, thanks so much for being here. Everyone, as always, thank you for listening. If you want to talk to us, you want to share your story, you want to see how you can work with us, or just ask us some questions to get pointed in the right direction, we'd love to talk to you. Go to dentistadvisors.com, click on the yellow book free consultation button. Again, we love to hear your story. Until next time, that was our 2 cents. Have a good weekend. Bye-bye.